Fantastic. Welcome, everybody. Oh, look at this great crowd. Obviously, tax is really exciting. It's got you up on a Thursday morning after a late night. So I will be talking about tax today, but I'm talking about it in a practical and a structural sense. I'm not going to be getting into too much detail. You can track me down later. You've probably already heard the many speakers about different aspects of tax, and this will probably flow in nicely to that. So let me just kick things off a little bit. You may not have noticed, but in the last couple of years, more than 100 countries have either added new taxes, especially sales taxes, VAT, GST, whatever your language is, as well as tweaking things like property taxes, short-term rental taxes, and things like this. A lot of that is hidden underground. You don't see that when you're buying things, but arguably, your single biggest expense as a traveller, tax expense, is probably not your income tax, it's probably VAT. So we're going to talk a little bit about how you structure yourself in VAT. There's some nuances that drive this. And I want to highlight the fact that the travel industry, particularly overland transport and short-term accommodation, are the target. Yesterday was announced in China that everybody selling products in China, travel products, have to report that to the government. Every platform, every website has to report to China. That has been in place for nearly 3 years here in the EU. So every time you're buying things, the booking is going directly to the EU, and the EU is chasing that down to tax the properties. And then if you're using unregistered properties, then they come chasing them. For instance, most VAT here in Bulgaria is about 10%, but if you're an unregistered accommodation, if you get caught, it's 20% plus penalties. So the penalties are quite big. We're seeing this increase. Next week in Spain, most accommodation, or actually all accommodation that's not already taxed, will probably have 21% tax added to it. So next week, it could be 21% higher on everything you're doing there. We've already seen the impact in places like Croatia, which has lost 40% of its market with cost increases, both combination of greed and taxes. So this is having a big play out there in the world. So what gives me the right to be standing up here talking about that? So I'm going to confess, I'm a baby boomer. I'm over 60. And I love life. I've travelled over 100 countries. I'm trained as a chartered accountant in Australia. This is a really nasally Australian accent you're hearing. And if you don't understand, come and hit me up later. So I came through school, I did my university, I became this chartered accountant, and I specialised for a long time in international tax. Now, international tax really hasn't changed its structure for the 90 years that has been in the world. 90 years ago, there really wasn't that much international tax. So the structure around the world hasn't really changed, it starts tweaking. Although every country is different, there's some broad structures which I'm trying to portray to you to help you set structure your own thing. I've been living in Europe for 6 years. I have a residency in France under a beautiful visa, not a Nomad visa, it's a startup visa. It's a 4-year visa. Nobody ever talks about, but it's amazing. Great visa for all of Europe. I also have residency in Eswatini, which is a tiny little African country surrounded by South Africa. Why? A couple of reasons. But they have a territorial tax system, which means I only pay tax on money I earn from Eswatini. My global income is not taxed anymore. That's part of this structuring. Fun fact, I discovered Bansko 11 years ago. This didn't exist. The roads probably even didn't have tar on them. I was actually on a big adventure trip. I was riding a motorcycle from China to Barcelona. I came through here by accident. I thought, this is a beautiful place. Co-working Bansko kicked off in the late 90s, had some media, came through, and now I've got the vibe. And that vibe is stronger and better today than I've ever seen it. So congratulations on coming to one of the biggest nomad places in Europe. All right, new taxes come through. The EU is particularly aggressive. They reckon there's about $90 billion worth of uncollected VAT. So most countries are poor after COVID. They've been supporting their people. The coffers are low. They're all topping up on tax. And they're not doing it in a particularly smart way. All right. So here's a few examples that you've probably seen. Who's from the UK? Who's seen the exit taxes? Who's seen the new retirement taxes, the transfer in the family tax? Oh my God. What I heard last night, 11,000 millionaires have left UK in the last 3 or 4 months. Imagine the brain drain and wealth drain from a simple tax change that loses that impetus in the economy, that smart brains. So governments are not really doing this smart at the moment. We can't influence that, but just highlight the fact that they're coming for you. And they're coming for us. They decided that it's really hard chasing all of your businesses, so they're coming to the platforms that are selling products around the world. They're saying, you have to collect and pay the tax. In every country in the world, basically, is what they're heading to. And so New Zealand did this last year. And so, I don't know, 80% of the world's travel agency platforms stopped selling New Zealand because you had to register and pay tax every month, and even more complications. So it's too hard. It's New Zealand. How much business do we do for New Zealand? Goes down their tourism. Oh, we better invent a digital nomad visa. Come on, where's everybody? Hasn't worked yet. So it's causing some economic change. Now, as nomads, or while you're nomading, because most people don't live 10 years as a nomad and plan to do that for another 20 like I. Most nomads are in it for a period of their life. There's quite an amazing opportunity for you to structure yourself to lower your taxes now, but also into the future when you might go back home or settle in a new country. So I want to highlight this is the time to really look at setting up some global structures. Not a lot of money. We heard, where's Sunil? Sunil just talked about the sponsor that sets up US companies. I have 3. As an Australian, most of them are actually tax-free because they're foreign owned. It's great. It's American money, dollars. The volume purchasing of American goods is cheaper than most places in the world. Low supervision. Very backward in their paperwork, but you know, it's not all beer and Skittles, but there's massive saving. So setting up your right structure as a business starts with sales taxes, the VAT, GST, whatever your language is. So the Aussies in the audience, they're used to 10% GST. Most of the world is around 20%. Hungary, 27%. So most of the world pays a lot of money. But by and large, business doesn't pay GST. It's thrown on a consumer. So when you're buying things as an individual, you're paying that tax. When you buy things as a business, as a general rule, you don't. But you've got to play the game. Which is why you want to think about, even if you're an employee, setting up a sideline business, getting business tax numbers, buying in the business, and avoiding some of those taxes. Income tax, we're seeing competition around the world. We've heard from many people about how to save money in different structures in different parts of the world. They exist, obviously. Eswatini. We also have Gibraltar, it's another tax-free country for foreigners. But you've got to look into the specifics. So I'm just giving you broad ideas to send you some places to go and look. Malaysia, territorial tax system. Thailand was good, then it was bad. New Zealand was actually quite good. It doesn't have capital gains tax. So if you're building something to sell, New Zealand's quite good, except if it's property. So there's nuances everywhere, but there's opportunities to drop a lot of your profits tax and your income tax. or to set up so that you don't pay it later. In Australia, we're seeing also an exodus because the government has decided that they will tax theoretical gains when your retirement fund has placed investments in companies. So all the startups I know started a startup, they're not making any money. Well, suddenly it's hundreds of thousands of tax each year you've got to pay when you actually don't have that money in Australia. So you're getting all these Australian entrepreneurs now saying, I think it's time to leave the country. So structures change. That's the other thing to keep an eye on. All right. I think I've just covered some of that. The key aspect of using the company is that you're now going to use that for purchasing. And as nomads, your travel is often one of the biggest expenses that you have. Now, if you have a reason to be traveling, you have a business reason to be here, and guess what? We're all at a paid conference in Bulgaria. All these travel costs are tax deductible. And if you're an employee, you probably don't get that necessarily. Whereas you could if you'd done your purchasing through a sideline business, another company. Okay, few general rules. You will need to keep travel diaries. You'll need to record who you're meeting, when you're meeting it, that sort of thing. You want to record overland travel, if you're driving, your kilometres and things like that. Pretty easy. If I spend 30 seconds a day writing it down, I've overspent it. Just into an app, record it, and so forth. You want to try and use online purchasing rather than offline. Let's have a look at some of that. Again, EU rules are looking at online purchase and saying, all right, you as a seller, we have a platform, you're booking and paying us. We're told, what's the IP address that this person is coming from? Which country are they buying from? If I'm selling a Bulgarian product and I'm selling it to an IP address from Bulgaria, that indicates it's probably a domestic purchase, probably needs to have VAT on it. Yet if I'd used a VPN while in Bulgaria and bought it with an American IP address, to me as a platform, that looks like an American's buying me. Check number one. Number two, usually you would look at the credit card number. And credit card numbers are actually country dominated. You may not know that, but your country identifier is built into your credit card number. The credit card comes out and says, it's a Bulgarian credit card. We have an American IP, Bulgarian credit card. Maybe the credit card is more powerful. I need to add VAT. I need to add 20% to that. But if my credit card was an American credit card, I use America because it's the most business-friendly part of the world these days, but if I've used an American credit card through my American company, an American VPN while buying stuff in Bulgaria, the Bulgarian business or our business goes, it's tax-free. It's a business-to-business transaction. Sorry, no VAT. Guess what? You've just saved yourself 20%. How easy was that? VPN, American company, American credit card. American companies, I don't know what the sponsors were charging, but it costs you usually in the range of $50 to $100 to set it up. Pay somebody, you might pay $500 for all the effort of paperwork. Not expensive. Annually, most of the LLCs around that $50 a year. Not a lot of expense. We also have what's called a C corporation in America because we're looking for investment from angel investors, and so we need a proper company in the US. That's not $50. All right, you've heard it today. Brittany gave a great talk yesterday, the legal eagle out of America. Separate your personal from your business. try and find everything in business. Now in the travel industry, obviously I'm dealing with travel products, travel costs, phones, internet, technology. There's almost nothing I touch, except probably my food and sometimes my rent when I'm in France. It's not business. I actually don't need a lot of personal money to live because the company pays for it all. And through the company, I'm doing it VAT free in many instances. It saves my wife and I a lot of money. But it's a discipline. You need to have it, you need to keep your credit cards separate, you need to be and remember, what is this purchase? If I'm down the bar at Ginger, well, if I was here last week, that's personal. But this week, because I'm holding a business meeting, it's business. Oh, okay. Interesting. There's a great, I won't call it a loophole, but it's an allowance that many Western countries have in their tax law to design for employees to go travelling. And what happens is that they say to all the businesses, your employees can go travelling around the world, around the country, and you don't need to collect receipts. As long as you give them an allowance under what we think is viable for that country, you can pay these people without receipts, without invoices, and the recipient, the employee, doesn't need to have it onto their, it's called a group certificate in Australia, their declaration of their wages. Hold on, that's tax-free. All right, now, for a US company, which employs me, it's 187 euros a day in Bulgaria. It's one of the smallest. If I'm in Bulgaria, 10 days doing business, $187 a day, or euros, 1,800 euros, nearly 1,900 euros, tax-free from my company. The company doesn't need to pay me, it can sort of put it onto my loan account. But hold on, if I've just earned 1,900, that more than covers at least a month's worth of living in Bulgaria. So your travel allowances could actually become one of your biggest incomes earning, and it's not listed anywhere, it's not taxed. Really good one. Australians, sorry, tax office changed last year. Your accommodation's not on that, your allowances are lower. Country by country differences. Who's noticed that different currencies for the same thing have different prices? Actually can be huge. I'll give you an example. We bought a marketing tool, a CRM tool from a French company. At the time it was called Send in Blue. Later became an American company called Brevo. And it was all right. It used to be $15 a month. Pretty easy for what we're doing. Changed to American company, prices started going up. The price in Europe went up to $65 a month for our early introduction. So hold on, we're not sending that much. It's not worth 65. All right, and that included VAT in France, 20% VAT. What's the price in America from our American company without VAT? It's 70. What? Hold on. Should be cheaper in America. Volume, all American software is cheaper than European as a general rule. There's no tax, it should be at least 20% cheaper. It wasn't. We're not going to buy it through American companies. Let's have a look at our Australian company. What's the price in Australia? 25 euros. Okay, just checking, said to the company, is the price is right? Yep. Bought it through the Australian company, saved 2/3. And so every day when I'm buying things, I shop around, and to be honest, in my group, we have about 10 companies in 5 countries. It's not a lot of cost. It's a little bit of discipline in the paperwork, but it's actually not that hard. It's like, hold on, that extra $50 I've saved a month is now going into some staff or some outsourcers. That's the other reason we use Africa. So for $2 or $3 an hour, you can get some really good English-speaking, talented people. When you become resident, you also get more advantages. My global travel insurance, while a French resident, for everywhere including the United States, for me as an individual, costs me 150 euros a year. Not even a month, a year. As an Australian in Australia, I can't do that. Anyway, I'm going to have to keep moving. I'm going to run out of time. Just be mindful that the tax office are coming to you. We've already seen the Russian Nomad hit squads in Bali that are shutting down, deporting people. We've seen at least 5 countries arrest nomads, put them in jail in the last year, and deported them for tax reasons. The answer is, as the old adage goes, if you're walking through Africa with your friend and a lion comes up behind you, you've got to run. Now, you don't have to run faster than a lion, you have to run faster than your friend. So, you want to make yourself harder to pin down for tax, to make it too hard for a taxing authority to chase you. And that's why having multiple staff moving all the time, different residencies, makes it hard. It now has to go through a legal process. There's not really a lot of money there on the table. The tax office is probably not going to chase you. You're too hard. Not a great cost-benefit analysis. Just be mindful that the fines are big. Unlicensed accommodation, Andalusia in Spain, 160,000 euros. And places like Canada are charging that to the clients if you book in unregistered accommodation. Who wants a 160,000 bill because they've taken a cheap apartment somewhere? No thanks. Just be careful of some of those. The digital nomad visas, most people in the world don't use them. They're not really designed yet. It'll get there. We're in version 1. One of the biggest trips is that while your personal income might not be taxed in the country or it's taxed at a limited rate, your company now may be considered, your foreign company may be considered a local business because you're managing from this local country. Oh dear. Who wants to pay Spanish income tax on an American company because it's managed from Spain? Controlled foreign corporations, I won't get into the detail. You need to learn it. It's about you controlling a company from another country. And it's now becoming a target for many tax authorities. The rules basically mean that either, like in Australia's case, an individual that runs a company overseas can be taxed on the income of that company. Europe, it's not like that. It's only if your European company controls another foreign company. So it's a little bit easier. It's one of the reasons I was happy not to be in the Australian tax system. All right. What do? We want to get a structure that makes sense. There is research. We'll keep it simple. You want to take advantage of the opportunity now while you're a nomad, changing countries and harder to pin down. You want to leave your home tax country because that opens up a world of opportunity that most people of your friends don't have. So you don't have to do it, but it's a really big opportunity to start saving some serious bucks. Buy smart. Buy your things through companies, find a business excuse, get into the habit of documenting a little bit, and suddenly you've got proof if anybody comes looking. If you're registering on platforms, eBay, Amazon, selling stuff through these sort of platforms, make sure you register as a business and keep your registration up to date. Because these platforms are now going to say, oh, it's a business, no tax. Thanks very much. We're just changing our mindset. We've got to start thinking as a global entrepreneur. I'm not just a marketer, not just a developer. I'm now actually a global entrepreneur. So keep an eye on it. It's moving quickly. Savings are awesome. And this is me if anybody wants to track me down. I'm nomadic 10 years. Thanks very much.